Welcome to the channel. Leo never loses, or at least I try not to. So today, let's get right down to business. Today is the ex-dividend day for NVDY. So let's take a look at her. NVDY. See if we're gonna buy some today, or maybe I buy some later on. Maybe I can't buy right now when I'm doing this video, but maybe I buy later on if she goes a little lower. Now, she's at 24.82, and my average cost. You know that's not my average cost. My average cost for NVDY is 22.02. Okay, 22.02. She's at 24.82. So she's above my average price. So I'm going to hold on maybe a little more. Maybe in the afternoon she drops a little more. Maybe I buy. For now, I'm not going to buy because I don't want to raise my average cost. But having said that, let's take a look at the dividend, because I have, let's see here, I have 325 shares. Okay. Now she paid. Let's see. YieldMax paid 20 cents a share. I got a few YieldMax. Let's see. NVDY, she paid $1.09. Okay, $1.09. So let's go back here. $1.09. We got 325 shares. So that's 325 times $1.09. That's $354 that I'm going to collect tomorrow. Okay, now that money that's going to come in tomorrow, I could do whatever I want with it. I could leave it in my account as cash. I could take it out. I could buy other shares, whatever it is, because that's pure profit. Okay, because my average cost is below, okay, what she's trading. So I'm making all this money on top of the money that I'm going to get tomorrow. Okay, because right now my average is at 22.02. She's at 24. Okay, that's $1. That's $2.80. So right now I'm making with her 325 times 2.80 cents. I'm making $910. So if I decide to close everything right now, I'll make another 900. I'll make another 900 and what was that? I make another $908. Let's see, it's 280. That's 2.80 times 325. I make another $910 with it. Okay, plus whatever I'm going to collect tomorrow. That's the beauty of buying under your average cost and having that NAV erosion control. Okay, very important in my opinion. Okay, now there's some questions here that are very good questions, and we're going to address them today. Let's see, like this one, Shindio, right? This is a very good question. I appreciate this question. Is it going to a point the average is going to be too low? You're no longer going to be able to buy unless the ETF is bear forever. Not good. That's what he's telling me. No, that's never going to be the case. Okay, you're always going to be able to buy. Whenever you want to buy, you can buy, and that is not going to be your problem. That's not going to be the problem. He asks me here again, yes, I understand, but every single month, your average, meaning my average, is going down. So the lower you wait, the more difficult it is to get a price below your formula average. I understand, and I think it's a good policy. So he understands the formula. He thinks it's good, but the only thing he's having a little issue is that he believes that it's got to go bearish for us to buy. No, that's not the case. I'm going to show you. Let's go back to the platform. Okay, now NVDY. Right now she's trading at 24.81. My average is 22.02. Okay, so if this, I have it like this because when I started trading these, I wanted to get rid of the NAV completely. I didn't want to deal with that NAV. Okay, that's why when you go to my portfolio, right, you look at my portfolio, none of them have NAV erosion. Okay, none of them have NAV erosion, except Connie, which I'm going to take care of her next week. Okay, but the rest are in the money, meaning that I could close them right now, and I make money on them. That's how I want to be. Now, I'm going to show you how to take care of that issue that he's telling me. Okay, it's very simple. Look, let's go back to NVDY. My price is 22. She's trading at 24.81. This is very simple. You decide how much risk you want to take. Okay, the margin buffer that I have now is $2.80, right? Because I'm at 22, she's at 24, so it's $2.80. That's the margin buffer that I have. Okay, and in other words, I'm going to show you. It's important that you pay attention to this, okay? I'm going to show you. 325 times 2.80, that's $910. That's the margin buffer that I have, okay? She got to go below my 22.02 for me to be even. But right now, this is the margin that I have, the buffer margin that I have, okay? This is the risk that I'm taking. I don't want to take a lot of risk with her. Now, if you want less margin buffer, it's simple. You buy a little higher. You get closer to the price action, okay? That's going to take care of that issue that he's talking about. Now, I'm at 22. If I want to be at 23 because I want to be a little bit closer to the price action, then you buy at 23. You know that when you're going to buy, you know that when you buy at 23, your average cost is going to go a little higher, okay? But you feel okay with that. You want to take a little bit more risk. Remember, the beauty with this formula is that you are in control of what you want, okay? You're in control how many shares you want to buy. You're in control where do you want to buy them. You're in control your margin buffer, how big you want it to be. You're in control how much risk you want to take. Okay, right now I'm taking very little risk because I wanted to bring him down, all the way down. I didn't want to deal with a NAB. But now, if I think, okay, the price is 24.84, I'm too far away, no problem. Instead of me waiting to buy again at 22, at 22.02, I'm gonna buy at 23. I'm gonna raise my average cost a little bit. Okay, I'm gonna take a little bit more risk, right? I'm gonna take a little bit more risk with them. And I'm going to raise it. I'm going to be closer to the price action. So you raise it. Listen, you are the one that makes that decision, okay? If you want to be closer, if your margin buffer, you don't want it to be that big, you get closer to the price action. You make that decision. Now, keep in mind, they all don't move the same, okay? So you have to have different price action for different prices for each ETFs, because they don't move the same. You see, for instance, Misty moves a lot. Okay, so Misty moves a lot. So you got to know where do you want to be, your average cost. If you want to be closer to the price, then you buy a little higher. Okay, if you want to have a big cushion, then you buy a little lower. You decide. Right now I have a huge cushion because my average with Misty is 20.50. But I'm going to tell you something. In the coming weeks, I'm going to do another video because there's some of these that you can sell. For instance, Misty. And I'm going to show you, okay? I'm going to get rid of her. You know why I'm going to get rid of her? Because they're not designed to go to the moon, okay? They pay big distributions. They do options. And that's not going to help it go to the moon. So whenever I think it's the right timing, I'm going to sell them and then buy them back again, okay? I'm going to show you how to do that because that's another strategy that you need to do, and a few of them, okay? You need to take advantage of that, all right? Very important. So tell me if you understand this. You decide how much risk you want to take, how close you want to be to the price. You see how close you want to be to the price, okay? You decide that. You are on control. You control your portfolio. There's a few things you can control. You can control where you buy. You can control where you sell, the amount that you're going to buy. Okay. You can't control how much they're going to pay. That's up to them. Doing the options. But these are the things you can control, how much risk you want to take, okay? Now, for instance, Connie, I'm at 1496. When she come again next week, I'm going to have her under control. Okay, Alti, price, 1032. Let's see, Alti, 1076. I'm happy there. No worries, I'm going to stay there. Misty, you already know. Tesla, 1208, 1241. Remember last time I told you when I buy Tesla, I'm going to be on the money? I'm on the money. I'm making money with her. When she pays now next month, I could keep all that distribution. Do what I want with her because I'm not underwater, okay? Zero NAV erosion. That's why it's very important when to buy them, okay? And at the beginning, in my opinion, you need to buy them under your average cross so you get all that NAV controlled. You have no issues with that, okay? So listen, having said this, remember, I'm not a financial advisor, okay? This is what I'm doing with these ETFs, all right? If you want to buy them, you need to do your own research and come up with your own conclusions. This is what I'm going to be doing with them, okay? So keep that in mind. And having said that, I'm super happy everybody that's joining and asking questions. I really appreciate it. Keep coming with those questions. And if you like the channel, you like more of what I'm saying here, subscribe, join and subscribe to the channel, okay? Because make no mistake, I'm gonna make that $1 million in 24 months. You'll see how I'm gonna keep growing this account. You're gonna see how I'm gonna continue to grow this account. So anyways, I want to get that in there. It's time for my Cuban coffee. Ooh, so good. So anyways, tell me if you understand this because it's very important. You decide how much margin buffer you want to have, how much risk you want to have. If you want to be closer, to the price action, right? Then you buy. If you want to be further out, then you stay further out. You decide that, okay? Right now, like I said, with NVDY, I'm at 22. I have a big cushion, okay? I'm taking very little risk, but you decide how much risk you want to take. Tell me in the comments if you understand this. It is very important about the formula, okay? You are in control. You decide what you want to do. So, anyway, I'm done here. So, like I always say, may the winners be on our side. See you soon.